Morning, guys. So today we're going to be talking about Qualcomm, and this was brought up on one of the 1 o'clock live streams, and I remember seeing it and saying, okay, there might be something here. If I remember correctly, we may have been looking at it to sell options on, to sell puts on down the line, but for these purposes, we're just going to do it from a chart perspective. Now, they're huge in the chip world. I know they've done a lot of things. They've had a lot of antitrust issues. I could be totally wrong in saying this. I think they did something with Apple. I know they've done things with Huawei in China. So they're big in acquisitions. And the big news about why all chips are struggling right now is for this reason: the chip shortage, the global chip shortage. And a lot of this goes back to the tariffs that are on China, because a lot of these companies do a lot of production in China and whatnot. So let's see how this fares out from a chart standpoint. I'm going to show you why I like it from a chart standpoint and what to do with it. We're going to go long term. I'm very interested in going long term with it. I'm going to show you how to swing trade it. I'm going to show you how to do a day trade on it. But remember that my biggest thing that I always do is long term stuff. I'm not much of a day trader, although I do teach it. And we have quite a few people in the Bid and Ask Nation that do it. And if you want to join the Bid and Ask Nation, it is $58 right now. The price did go up, and it's going to continue to climb. So there's over 30 spots remaining. So if you want to get in and learn from me and learn from the community. So let's get started with Qualcomm. So just looking at the zoomed out 2-year chart, you can see that Qualcomm has had quite the run in the past, since the beginning of the pandemic. They shot up. They have done very well. And of course, they've gapped up a couple times. Qualcomm is very notorious for gapping up based on earnings, based on government settlements about antitrust rulings and whatnot. I remember there was a time back in, actually right here. I remember I owned Qualcomm, and it kind of just hovered around this consolidated area for a very long time. And then one day, all of a sudden, boom, this thing it happened to skyrocket at maybe 3:30 on a Friday. And this thing just took off and shot up and just kept going. And then, of course, it came back to life. But they're very notorious for making big moves based on news and based on earnings. So the reason that I'm showing you the gaps is I always say the gaps usually fill. So this is their most recent gap, and you can see that the price has come down and the gap is filled. So that's why I don't like gap ups. Gap ups are good for taking profits. When you do get a gap up, I always say take your profits off the table. And what take profits means is, let's say you invest $10,000. Your account of that one stock grows to $12,000. You sell $2,000 worth of stock, so you still have your initial investment of $10,000. So that is when I say take profits, that's exactly what I mean. I don't mean sell your entire position. I mean take whatever profits you have made off the table. Sell that number of shares. So let's zoom in here and see what to do with this. And I'm going to pretty much reiterate what I said on the live stream. So the reason that I love this is it is tracker share city. So Qualcomm is definitely a company that I want to own. This is almost a value play for me. It hasn't hit my number yet, but it's almost there. But from a chart perspective, we are totally oversold because we're below this 32% line, and our red line has finally crossed over our yellow. That doesn't mean go and buy it. Remember, red line crossing over yellow is good, but red line over yellow in the sweet spot in this area is what counts for wanting to buy it. But the fact that we're just coasting along the bottom, the stock price is still kind of falling on us. It absolutely still could keep falling on us. Most likely it's going to hold at this 200-day moving average. You could see a couple days ago it tried to go below its 200-day, kind of bounced off of it. So I do have a feeling that that's going to hold unless something happens in the market where we have some kind of big correction. Qualcomm will absolutely go with the rest of the market. It will not hold this 200-day moving average if something drastic happens. So what I would do here is throw a tracker share on. And a tracker share is one share. Now, on a lot of videos, I say throw a tracker share on. I am not telling you guys to go out and I look at so many stocks per day because we have 200 or 300 people in the Bid and Ask Nation. I can't I don't even remember what stocks I'm looking at. So if you're asking me a question about Qualcomm and I say throw a tracker share on it, that is for you. And if you like the stock, you can do it. I'm not saying that everybody needs to go and put a tracker share on it, because people are saying I have like 15 tracker shares. That is not what I mean. It is impossible to buy every stock. It's just impractical, not even from a money standpoint, but from just keeping track of everything. In my account, I will have 5 tracker shares at the absolute most. Typically, I only have 1 to 2 tracker shares. But Qualcomm is one that I'm going to put a tracker on because I do not want to miss it. And the idea of a tracker is this could go sideways down here for another month. And then all of a sudden, this thing just starts creeping up. This is what's going to happen. Let's say it goes sideways for like another month, and then it starts creeping up and it crosses into this area. If it's on my watch list, yes, I can see it, but look at my watch list. This is my S&P sectors, but look at this is all my watch list. Look how long this thing goes. I mean, it's impossible to be able to go through all of this and see it. So the point of the tracker share is, instead of it getting lost in your watch list, have it in your brokerage account every single day, and you see it, and you pay $129.75. Let's say the company goes bankrupt. They go to zero. You lose $129.75. That's it. Best case scenario, you get this thing moving up on you, gets into the sweet spot, and you make a lot of money on it. And you're going to make a whole lot more than $129.75, because when it gets in the sweet spot area, that's when I want you adding more shares to it. Take as big of a position as you want as the chart dictates. So the tracker share is just there as a reminder every single day that you don't forget about it, because this is a company that you can make some good money on. So right now, buy a tracker share if this is a stock that you like, and just wait until the red line crosses into the sweet spot. We get some green engulfing candlesticks and moving up, and you should have a pretty good run up to this 168 area. You'll face resistance along the way, of course, but you should have a good run. Let's go to the swing trading chart. This is my daily. When I was speaking about the resistance just a second ago, this is the resistance you're going to face. All these moving averages are the resistance lines that you're going to face, and these are the 25, 100, and 50-day moving averages. So anytime you run into them, you're going to face resistance. You're especially going to face resistance at this 100-day moving average. That's just where the hedge funds decide to buy or sell big positions at. So we'll see. As far as a swing trade on this, I would not recommend it, just because you are in all of this mess just bouncing around. There are better charts to trade out there for swing trades. When I do a swing trade, I like to be up here where I'm not dealing with any of the moving averages, or way down here where I'm not even close to any of these moving averages. So when you get into this moving average area, it's just very hard to make money, because you're daily, you're bouncing up, bouncing down. So why make it hard on yourself? There's 10,000 stocks out there. Go pick another one. So let's go to a day trading chart and put in Qualcomm and see what we got. So Qualcomm is one of those stocks that you can trade daily and pretty much make money, because it always does some kind of good move at some point during the day. You can see back here, you probably did 2 hours worth of movement. Here you did about 4 hours worth of upward movement. So when you're trading on a daily chart, day trading chart, remember, if you want to go long on it, you have to be over 80% in this and just hover in this area all day. Once you drop into 70, below 80% into the 70s, this number right here, let me move this for you. This %K, once that moves into the 70s, you got to exit your position, take your profits, and run. When you are going short on it, you want to be below 20%. So between 0 and 20. And once just coasting like this, once you pop through and go into the mid 20s, you got to exit your position, and this number will be 21 plus. So when you're short, what you're looking for are good engulfing candlesticks moving down on you, selling volume, and you're good. And when you're going long, I want you to be looking for engulfing candlesticks like these ones over here. These are perfect with good volume. You're over 80%, and that's what you do there. So market's closed right now. I can't really teach you. I can't really show you live what to do on a day trading chart, but in each one of these videos that I do, I'm always just going to teach you how to do day trading. The ideas of this entire channel is to teach you how to do things, not hold your hand through it. If you want me to hold your hand, join the Bid and Ask Nation and I will hold your hand all you want. All right, so just a quick recap. What are we gonna do here? 100% put a tracker share on this. This is going to be a good stock if the red line turns up into the sweet spot with the yellow following. On a swing trade, we need to clear these moving averages. Once we get up here into this 150 area, you're gonna have a good trade on hand, break that resistance and get this thing will start moving up like that with green candlesticks. On a day trading chart, guys, just remember, you wanna be over 80%, between 80 and 100 to go long, between 0 and 20 to go short. When you're over 80, as soon as you drop below 80, take your profits. As soon as you pop up over 20, when you're short, take your profits. So that's it for Qualcomm. If you love it, throw a tracker share on it. And remember, when you do join the Bid and Ask Nation, you get all of the Everything Money software for free. 8 pillars, real estate calculator, momentum trading that's eventually gonna come out. All of the software you get for free, including your subscription. $58 right now to join the Bid and Ask Nation. You get me on Discord. I'm in there all day, every day, unless I'm sleeping. I make short videos for you. I'm about to go make a Best Buy video for everybody, and we'll go from there. So you guys have a great weekend. See y'all.